RIN TV coverage of the 2015 NAPSLO Convention is brought to you by the Lexington Insurance Company. Reinsurance can provide flexibility and capital for E&S insurers. Here we speak with Steve Eilers, manager of Gen Re's LA operation, about the property fac market, the tropical storm season, government insurance programs, and more. Here are the highlights.
The current condition of the property fac market is competitive. We're seeing clients take more risk net in treaty, which in a counterintuitive kind of way is creating opportunities for fac markets in that some companies are looking to lay off some of that risk that they now hold net. It's an opportunity for them to smooth results and reduce some of the volatility on their books. We're seeing ceding companies get pushed further out into the fringe of risk. They're going into areas that they aren't as comfortable with and being forced to expand their underwriting comfort. We're seeing clients look for consultation on new underwriting territories or new occupancies, and we find the facultative product is a really good blend here in that it can put underwriter to underwriter and have those types of questions. Pricing is certainly competitive, which makes risk selection even more important. And here again, the facultative product with that underwriter to underwriter approach can be a big help. Facultative and the E&S segment go hand in hand. I think the free rate and form of the E&S segment is a natural fit with the flexibility of the property fac product. AM Best recently came out with a report that showed the E&S segment growing as a part of the P&C pie, and we expect this trend to continue. The current conditions in the E&S side, on the contract bind piece, we find that efficiency and speed of service is very important. And we're really excited about a new Connect application that we've developed that's web-based that can offer instant capacity to certain clients while still maintaining that underwriter to underwriter dialogue. We're blending speed with underwriting integrity. On the brokerage side, again, speed is very important, but here the risks are more complex, which is the natural source of business for the E&S segment. Here's where terms and conditions need to be negotiated and thought through, sublimits need to be reviewed, and again, the risk needs to be reviewed in much more detail, where having that second head approach can be a big help. The property market is absolutely ready for large losses should they occur, financially speaking. Industry capital is at all new highs, and the premium to surplus ratio is at about 0.8 to 1 or even lower. Simply stated, the industry can write the check should the event occur. What I think is going to be more interesting is how the industry responds post-loss. I think capital markets and alternative capital is interested in the reinsurance segment right now because the volatility of it introduces an element of higher margins. Volatility looks good on paper, but the reaction when the volatility actually occurs might be something different. The major influencers of property cat pricing going forward will likely be if there's an event or not. I think, and the way models respond to expected risk. I think Mother Nature has an algorithm, we just haven't figured it out yet. And models are getting better, but there are still limitations. I think going back in history, events have shown us that it's the unexpected element of those large losses that really drive the financial impact to the industry. Going back to Superstorm Sandy, surge was a big component of that. Going back to 2005 and Hurricane Ike, the $1 billion loss in Ohio was unanticipated. In 2004, 4 storms hit Florida all in the same year, which had never happened before. And I think the best example of that would be 9/11, where all underwriters and underwriting managers had to re-examine worst case scenario and update underwriting guidelines as a result.
For more of our coverage of the 2015 NAPSLO Convention, visit the RIN TV On Demand Library.